guys, welcome back to yet another episode of Market Structure Analysis. My name is James Pakion and this is Pakion FX. Thank you again for tuning in to this week's episode. Currently, as you can see, we are looking at our favorite currency pair, which is actually the only currency pair that we trade, which is GBP USD. And just to give you a sort of summary of how the week has been going, we fell into an ascending channel. That's as you can see, this is what we've been looking at right here, but it is not going as we had planned. So let's just get straight into the video. Let's break down this currency pair and see what the market is trying to tell us. So yeah, as you can see here, we're actually in an upward ascending channel that we actually figured out was happening once we spotted this lower low, which actually correlated with our Fibonacci levels, level 0.382. And as you can see here, there was actually a massive buy from this particular area all the way close to the Fibonacci level 0.786, but it never got to happen. It actually got to happen yesterday, so we'll get into that in a bit. So as you can see here, once we noticed that this currency pair had actually been seeming to move in between these particular areas, we drew these two parallel lines, and as you can see here, the market is actually pretty much respecting how these trend lines rather are moving. So as you can see, so once we spotted this particular area, we drew the corresponding trend lines to form an upward channel, and the currency pair has actually been moving around this particular place. It hasn't broken out from either direction, so yeah, we can assume that we will still continue to have opportunities to either buy or sell depending on which side of this particular trend lines we are at. So yesterday, what happened yesterday? First of all, we actually managed to capture a couple of pips. We called out this trade on our previous video, market structure analysis. I'm guessing that was episode 8 or 7. We actually called out this trade. It went very well, but reversed before we actually hit our target, which was the next Fibonacci level. So what happened? Currency pair went up about from level 38 point. So let's see between this particular level, it should be 0.618 if I'm not wrong. So this was about 50 pips and then it reversed. So what I actually saw was that it probably formed an area of interest around this place, because this is where the previous week had touched or had visited. So I assumed it formed a sort of an area here, an area of concern. So once the trades got around this place, there were probably a lot of sellers who were already set here, or people had set their take profits around this area. So basically, you know, by take profit you're being sold out, so basically that is usually like a sell in the market. So that's why you see this very heavy movement to the downwards. It actually went almost to the other Fibonacci level, which is level 0.5. So it actually never touched it. It managed to reverse. So yesterday there was some fundamental news. Let's just check out in the economic calendar. As you can see, yesterday was Tuesday. So around this area, 3:30 p.m. around this time, there was the announcement of the core inflation rate year on year and the inflation rate year on year. So those two particular announcements, which is actually almost one announcement, they caused this massive movement to the upside. Yesterday we had actually situated ourselves. This is what we thought. So once the currency pair reached this particular area and it started moving down, it broke below level 0.618. yeah, it broke below. So what we assumed, and then actually we saw the formation of this particular candlestick, which usually shows that both the buyers and the sellers had already been in play, but none of them was strong enough to be able to identify, or rather to be able to hold on to market direction. So this is formation of that particular candlestick. It sort of shows indecision because the price opened, went all the way down, went all the way up, then closed almost where it had recently or initially opened at. So as you can see, once I saw that, and there was actually I viewed some bullish momentum, some bearish momentum near this candlestick pattern right here. So before this 4-hour candle had formed, we had actually moved to the low side. So this is what I thought. I thought that was a breakout, a retest, and a continuation. So I actually took my trade around this area. Let's see. So I actually took a trade around level, yes, around that area. My stop loss was just above this wick, and my take profit was around this particular area. So that was a good risk to reward ratio. Alternatively, you could actually have targeted this particular Fibonacci level. So that's about 2.59. So yeah, so this is what happened. The currency pair moved down, and I knew now this trade is going my way. Unfortunately, it came back up. I closed in the morning, the next morning, because I actually held the trade overnight. So I actually closed the next morning when I actually saw that this particular 4-hour candlestick had already formed. So I already knew that the bullish, or rather the people who were buying were already in play, and most likely I will have been taken out. So the currency pair continued. As you can see, it continued moving up. There was some sort of indecision around this area, but the overall trend of this particular currency pair yesterday was bullish. So this is why you see some sort of indecision here, some sort of indecision here, but ideally the market was still bullish. So what happened? So as you can see, this is around, let's just go down to the 1 hour. Let's go down to the 1 hour. Yeah, so the currency pair continued to move very gently around this area. This is after taking us, or rather after manually closing my trade. So that was actually a good call, because ideally the market will have gone and hit my stop loss, making me lose even more money, and that is never a good thing. So the market showed some form of indecision. It actually managed to stay above this particular level, 0.618. So what happened? As you can see, this candlestick pattern formed around what time? 3 p.m. yesterday, and this guys is what caused this very huge candlestick pattern. Actually, I was looking at this candlestick happening. It took less than 15 minutes for this whole thing to go all the way up. Finally, eventually hit the Fibonacci level 0.789. Is that 0.786? Sorry about that. So levels 0.786, it finally hit that particular Fibonacci level, and as you can see, there was a very beautiful reaction right there, causing the currency pair to collapse. This is a massive collapse, because it is a collapse of almost 100 pips, which is a move that GBP USD barely makes. Sorry about that. So this is a move that GBP USD barely makes in a day. It usually moves around 60 pips, but to move this much, this is about 100, and currently we're on here. So you see, it went all the way from Fibonacci level 0.786 all the way back to Fibonacci level 0.5. If that is not crazy, I don't know. So the currency pair has collapsed, finally reached this area 0.5, and as I told you guys, between 0.5 and 0.618 I consider the golden zone, so I barely trade, but this is what I'm seeing. So let's zoom back to the daily. Okay, so as you can see, there was this, ideally this currency pair is eventually going to if it doesn't break down below this level 0.5, which is actually confluencing with our lower trend line right here, if it doesn't break down, it will go up all the way and probably hit this other trend line. So Market direction for example, the rest of the week and next week, we might actually be noticing a lot of bullish movement on the to the upside, which is towards this direction, because the currency pair, ideally this is going to be the third touch on the trend line. So as you can see here, we have one touch, two touches, so this is going to be the third touch, and normally the third touch causes a massive movement to the upward, to the upside or to the lower side, depending on which side of the trend line the market is moving. So I am anticipating to have a reaction, or rather to see a reaction around this area. Okay, so this is around price level 1.38. yeah, so around this area. So once you notice a good reaction around this area, we are probably going to be moving bullish all the way back to this particular zone, which will actually be confluencing with this upper trend line, and this level is around level 1.383, maybe level 1.4. I am hoping I am not overshooting, but yeah, in between level 1.38 3982 and level 1.3, rather level 1.400. so yeah, we'll have to check how the currency will be reacting. But in case it doesn't do that, if it breaks below this particular trend line, we'll just wait for a retest. So this is how it's going to look. So we'll wait. So if it breaks down, we'll just wait for a retest or to this area, maybe around here, and then we can finally move down maybe to these other Fibonacci levels. Yeah, so basically that's how we are anticipating, that's how we're setting ourselves up for that trade. We made a loss yesterday, but it's all good. That's the nature of trading. If we don't make some losses, we ain't going to make profits either. So yeah, let's just wait and see how the currency pair is going to be behaving probably this week and towards the end of this week and next week. And yeah, keep it locked to this particular series, market structure analysis. And yeah, I will see you guys in the next one. Peace out.